Hey everyone, today we're going to talk about NextDecade Corporation, which I think is a possible good opportunity here. So I'll probably take the next 20 minutes to kind of go over the basics of this company. Just want to say, um, I'm not an expert, but this is kind of just a video on all the research I've put together. I do hold a position right now, both in options and um, options and equity, but I think it's, a possible 5 to 10x. It's only a, $2.8 billion company, and it really looks like it could be, like Cheniere or even Venture Global, and Cheniere, which we'll go over in a minute, is like a $50 billion or 50 billion market cap company. So, I think this is something worth talking about and could possibly. So I'm holding for the long term my shares on this. But okay, so let's start with a little outline. And by the way, sorry for kind of where I'm in. I'm not in my usual um, spot where I record. I'm in my bed because just had surgery and I'm recovering from getting my hip labrum repaired. And so far it's going pretty well. But anyway, okay, so here is the outline that I want to talk about tonight. First, we're going to compare the three public pure LNG plays, LNG shipping plays. Then we'll kind of look at global LNG use and, is it going up? So sort of the supply and demand there. And then how does it play into trade talks right now, especially with Europe? I think that's an important point. And next, I want to go over NextDecade's latest May slide deck. I think there's some good stuff in there we can review. Then I want to go over the coming catalyst, which is one of the main reasons I bought the options. There's about three catalysts, and one was actually an analyst price target upgrade, which I didn't expect. This happened this past Friday. So there's probably about 3 to 5 catalysts coming up in this company over the next quarter, so we can take a look at that. And then I want to share some analyst takes. There's two main analysts following NextDecade, and I think they have some interesting things to say. And then, as always, want to share my short-term and long-term price targets, and we'll do some technical analysis. All right, so let's start with this spreadsheet I put together that just kind of goes over, and specifically this column here, right? Like, so market cap. Well, and let me back up 1 second. The reason I don't normally do videos on single companies, but I really think this small cap NextDecade has a, unlike other, pre-revenue small caps, you don't always know if they're ever going to get to actual revenue. There's a lot of hype and BS. But with NextDecade, there's a lot of big name customers that have already signed up and spent money on and put money into the development of these, they call them trains. And there's going to be, in phase one, there's 3 LNG trains. And then in phase two, I think there's trains 4 and 5. And then it can go all the way up to 10 trains. And we'll get into that in the presentation. But I guess what I'm trying to say is to me, this is a small cap opportunity where it's going to culminate in revenue. I mean, you have players like Saudi Aramco who've put money into the company, Total Energies, which is the French oil and gas company, uh, and then ExxonMobil and a bunch of others. So right now is the development process happening for phase one, but there will soon be revenues. And right now they're projected to finish some of these trains in 2027, possibly late 2026. But with the new Trump um, focus, on oil and gas. You either love that or you hate that. I think the timetable could be pushed up here. So, in any case, let's jump back into this. So you can see that next decade's market cap is 2.8. You have Cheniere at 52 billion market cap now, and Venture Global is at 43. Here is the current, well, 2024 revenues. Obviously, next decade is at zero. They don't have any working trains yet, but we'll get to that point. Their construction is ongoing right now. Cheniere had 15 point, let's just call it 15.8 billion in revenue in 2024. And 2022, I think they were in the 20 billions, and that's because the price of natural gas was a lot higher then. Um, and then Venture Global has almost 5 billion in revenue as of 2024. The other thing you're going to hear a lot is MTPA. That means millions of tons of basically liquefied natural gas. And so this was the capacity in millions of tons. Um, for Cheniere, so it was 46.5, and Venture Global was 37. Then I put these two columns, which are projections for 2027. So you see that next decade will be at about 27 MTPA. Cheniere should be about 60 with, I think, another train or two goes online then. Venture Global. Venture Global, by the way, is another one that I'm currently looking at. I wish I had gotten that one on a previous dip, but it's pretty impressive, and they already have a lot of working trains. But obviously, the market cap is a lot higher at 43 billion. They're going to be one of the largest when they get through with all of their construction. And 2030, they're projected to be at about 105 MTPA. Just to give you a sense, but by no means is this everything else that's going on in the LNG space, but it looks to me like the major oil companies, the majors like Exxon, Chevron, I don't know, Shell, they like to take stakes in these LNG projects rather than buy the company out. Um, I wonder if that's changing with this, if that might change with this incoming administration, but it helps them kind of avoid the engineering and permitting processes. And prior to the Trump administration, there was a ton of lawsuits and ESG to wade through. And so you've seen Exxon and Chevron take stakes in projects, and I have some of them listed here. There's something called the Golden Pass LNG. Exxon has a 30% stake in that, and Qatar, the country of Qatar, has a 70% stake. Chevron has two sizable stakes in LNG um, efforts in Australia right now. So there's a lot going on. Just a couple sentences on the history. Um, it's interesting. Michael Faraday, back in the mid 1800s, created a process to liquefy gas, and those principles kind of held and were developed and applied to specifically to LNG here. Um, so so now just it's only as old as 2016 when Cheniere really started shipping LNG. They basically pioneered the process, created the trains and the ships to kind of send LNG all over the world. And now Europe receives about 40 to 50% of their LNG from America. And I think well, we'll get into more details on that, but I just wanted mainly for this piece to just focus and just show you how small Next Decade is compared to these other larger companies. So that's why I'm, thinking Next Decade could 5x or even 10x from here and get to, let's say, a 20 to 30 billion dollar market cap by 2027 or 2030. So I think it's worth investing in right now for the long term. All right, let's go back to the outline. So one thing on global uh, LNG use here. Um, so I was asking some questions in Chat GPT, and right now, 440 MTPA was traded globally in 2025. The biggest consumer is Asia. Um, LNG comprises roughly 13 to 14% of global gas supplies and over 56% of global gas trade. So you can see global LNG trade in 2025 was 440 MTPA, with 60% of that going to Asia. And 2030, that number is supposed to be about 50% higher. So 660 TPA. Apparently, in Asia, there's a lot of coal to gas switching going on right now, and this is definitely playing a role. And one of the investors and contracts that NextDecade has is, I think, I don't know, I'm gonna murder the pronunciation, but it's Guangdong, I think, is a gas company in China, and they have a stake in one of the trains. So yeah, I mean, we're going to see 50% growth. Now, there is a lot of projects under underway. So there's also been some talk, and this is of course a risk, that there could be, global oversupply of LNG at some point because there's a lot of build out right now going on, as we just went over in the Excel spreadsheet. But we're not there yet. The what you want to keep an eye on is the Henry Hub pricing for LNG. And right now, that's kind of where it historically is, between like $3 and $4. Um, and in 2022, I think it went all the way up to like 10 or 11 when there was, global gas shortages. Um, Okay, so that's kind of, the larger backdrop we're looking at. There's definitely an expansion of the underlying commodity, or an expansion of the demand projected. Okay, so let's go to the slide deck that I wanted to hit here. This is, the front page of it. It's kind of interesting. I think this is more of like an artist's rendering or whatever. But this shows here like what it's going to look like at the Rio Grande facility. And these are all the trains where, a ship could pull up and be stocked with, however many MTPA they can carry and then go off and deliver them to Europe or wherever they're going to go. Okay, so let's. The other piece which I'm trying to learn about is NextDecade also has a carbon capture solution called, they refer to that as CCS. And apparently, in the latest bill that just went through Congress and was signed, the big beautiful bill, they did not remove carbon capture credits. So I need to get a handle on that, but apparently that's a pretty interesting piece of this company as well. Um, that they have kind of an innovative way to deal with carbon capture here, which could come into play. I don't have much to say on that now, but it's an interesting piece. All right, just real quick. So the facility is in Brownsville, Texas. 48 million tons per annum. That's what MTPA stands for. Under construction right now is phase one, which is trains one through three. Four and five are being commercialized, and that's what we're waiting on there. We're waiting on um, something called a FID, which is the final investment decision, and that means that, okay, they've lined up a customer that's going to put in money and own a share of that train, and then um, Next Decade will own 60% of trains 4 and 5 of the revenue, of the revenue that comes from trains 4 and 5. For trains 1 and 3, Next Decade only owns about 20.8% of the revenue that comes from those trains. So you can see, as the company gets older, they should get more and more of a share of the trains that they develop because there will be cash flow coming into the company. Early on, for the first trains, they had to take a smaller percentage of the revenue of the trains and then get more financing. So we should see that, ownership percentage get better of the different trains over time. First LNG is expected in 2027. I'm hoping that gets sped up by some of the new legislation that has just gone through, but we will hear from the company if that can actually speed it up. The other interesting thing is that this is such, and I don't know if I have a map here. No, there's no map, but the location of this Brownsville, Texas is pretty strategic. It's right in the Gulf Coast area. And it's right near the Permian Basins and the Eagle Ford Shale in Texas. So those areas have basically a straight line to these cargo ships, and I could really see one of the oil majors being interested in this company, not only from, an LNG standpoint, but also the location, being so strategically close to these big oil and gas fields. Okay, so here's a timeline. I don't know if we need to spend a ton of time on this. Let's just go from kind of the most recent backwards. So in April, Next Decade announced the sales and purchase agreement. That's the other term that you need to know, SPA. Sales and purchase agreement with Saudi Aramco and Total Energies to complete the commercial support for Train 4. Okay, there still is a outstanding FID for Train 4 and for Train 5. Um, February, Next Decade announces developments of trains 6 and 8. Okay, so I don't think they've gotten through the permitting process for 6 and 8 yet, but that's coming. So that's another catalyst. And each one of these trains is going to incrementally add a lot more revenue to the company. Um, in August of 24, Next Decade executes a Train 4 EPC contract with Bechtel. So Bechtel is the engineering firm that is building all of this. Each train costs, I think it's roughly like $4 billion. And I could be wrong. It might be $4 billion for trains 4 and 5. EPC stands for Engineering, Procurement, and Construction. And so they hired Bechtel, who has a ton of experience doing this because they did this for Cheniere back in the day. So it's a firm that knows how to do this and build these things. Um, and okay, so let's see. In May of 2024, Next Decade executes another SPA with ADNOC for Train 4. That is a Middle Eastern oil and gas company. I forget which country it's from. July 23rd, Next Decade completes 18.4 billion in financing, announces a positive final investment decision (FID), and construction begins on phase 1. So that's when they started building trains 1 through 3. And they periodically give, updates on the percentage that they have been through, that they've been in construction for. Okay, so we'll just go quickly through some of these. I don't want to spend a ton of time. Yeah, here's where they say LNG facility advantage and de-risked by Bechtel's track record of LNG project execution. That is true because they did, they built and went through all of the problems in the mid 2000 teens when they were building all this out for Cheniere. So that company has a great track record. Um, Trains 1 through 3 and associated infrastructure under construction, on schedule and on budget. Yeah, and this is, the trains 4 through 5 is what we're waiting on, what I'm waiting on before the September 15th deadline, which I'll go into in a minute. That's one of the multiple catalysts that I'm expecting here. And let me just go over what I mean by that. Okay, so let's take a look at this quick press release that was issued on June 12th. NextDecade finalizes the engineering, procurement, and construction contract for trains 4 and 5 at their facility. Okay, the key point here is, and I, made this a tweet. Hopefully, you had a chance to see it, but they agree to pay 4.77 billion for the work for train 4. Okay, so it is about 4+ billion per train. And the pricing validity under train 4 extends through September 15th. That means that this contract that they've set up with Bechtel goes till September 15th. So NextDecade has to announce a final investment decision where they get their partner investor and they lock in this contract with Bechtel. So it's going to happen before September 15th. Otherwise, this agreement with Bechtel is void. And it's the same thing with Train 5. So we have two, announcements relatively soon here. All right, so let's go. So that's one of the catalysts that I'm um, very much interested in, that it could happen in July or it could be in September. Um, Here's what I mentioned. Site location benefits from access to prolific available gas supplies from the Permian Basin, Eagle Ford Shale, and an uncongested port, and historically fewer and less severe weather events than other areas in the Gulf Coast. It's a strategically important area. Um, Okay, here's where the slide deck talks about the fact that NextDecade will own 60% of the equity in trains 4 and 5. Um, Again, these are a ton of details. I don't want to get too bogged down into this. Carbon Solutions is in the early stages of developing a potential CCS project, so carbon capture solution at the Rio Grande facility focused on post-combustion carbon capture. If this happens, they will earn money for carbon um, carbon capture credits here. So I just Googled this real quick. Yes, the One Big Beautiful Bill Act does include modifications to Section 45Q for carbon capture, utilization, and storage. The bill maintains the 45Q credit and it increases the credit value for carbon captured and used in commercial processes. Okay, so this is in kind of an undefined way for NextDecade to recognize even more revenue. But it's in the bill. There was some debate early on whether it was going to be removed, but it's still in there. So that's good for NextDecade. Okay, moving along. Not going to go through all the recent developments. Here's their construction update on the trains 1 through 3. Um, these pictures were taken in March. Here's their percentages. Again, this is as of May. So 42% or almost 43% done with trains 1 and 2, and about 17.8% complete of trains 3. And then it goes into like engineering percent done, procurement, construction, etc. Okay. Expansion. Rio Grande has the potential to be one of the largest LNG production facilities in the world, and it gives you your MTPA by train. Um, so we have 18 MTPA for trains 1 through 3, 6 and another 6. So that's 30 MTPA for trains 1 through 5 and then another 18 for trains 6 through 8. So that brings you to 48 MTPA. Um, Now, I've also seen, and I'm not sure if if this slide talks about, but they're already talking about trains 9 and 10. There is space for up to 10 trains, but that's obviously much further out. And here's a photo of the whole facility. From here to here, there's 6 trains. And then here there's potential for more development and more development here. So I think that's where they can fit in a total of 10 total trains. Um, the other catalyst we are waiting on is FERC. So the Federal Energy Regulatory Council is going to reissue um, the final order expected by November 20th. That one's for November. The one that could happen any day now is the final SEIS, which is, um, let's see. So that should be coming any day. And what is it? It is the final supplemental environmental impact statement, which gets issued by FERC. And why it matters. The final SEIS will determine whether the FERC staff's recommended mitigation measures are sufficient. It represents a near final step in environmental review before a FERC final order is issued, estimated in November. Um, FERC's final order enables NextDecade to proceed with Train 4 and beyond. It supports final investment decisions for Trains 4 and Train 5. So we need to see this SEIS before the final investment decisions happen. And this goes back to the letter that Senator Ted Cruz sent to FERC trying to hurry this along. Um, the SEIS addresses legal challenges, especially regarding environmental justice impacts on nearby communities. Okay, so I didn't go into this and I won't. There is a long history of legal battles for this NextDecade project. Just look at the weekly chart. The stock goes back 8, 9 years, and there was a history of legal battles, and it's finally gotten through all them, and it's down to the final issuances of some of these environmental things, and that's what this SEIS is. Um, so we should see that in July. The draft of the SEIS was already done in March 2025. Um, so what the impact on the project, this clears the way for the FERC final order enabling construction and investment decisions for trains 4 and 5. In essence, the July SEIS marks a pivotal moment. Once finalized, it will unlock key regulatory approval and financing milestones for Rio Grande's expansion. Okay, so enough on that. Um, and then it goes into some of the things I already covered about like global natural gas demand. Um, so I'm not going to cover all of that stuff. All right, so I guess we'll just. Oh, I just wanted to show this. Here is a map of the facility. So here's Texas, and then this is the Gulf here, and you have the Permian Basin and the Eagle Ford here. And then there's a pipeline that runs to here, and then the facility is right here. Um, so it's in a great location, which I think not not many others have talked about, but I think it would be great for a very strategic spot if somebody wanted, an oil major wanted to own that. So I could see a buyout almost for that reason alone. Here is the phase one, just to give you an idea of some of the agreements that these are 20-year agreements. And this is why I think that Next Decade is not your regular small cap pre pre-revenue type of a company. They've already made these 20-year and 15-year agreements with Shell, with Total Energies, China Gas, ExxonMobil, Galp. Total Energies is the French one, and then it shows you that these are sales and purchase agreements. So Shell has agreed to take for phase one 0.54 to 1.5 MPTA. I don't know if that's annually, possibly. And then, it goes on from there. So they already have all these agreements lined up, and these are not just short-term agreements. These are 20 and 15-year agreements. And this HH means that the price used will be the Henry Hub spot LNG price. Um, and then for each one of these companies, Shell has contracted out 13% of phase one. Um, Total Energies has 33% of phase one. So this is an interesting chart. Okay, and this is an important slide. So this just shows the billions per year that trains basically one through five could generate, so the cash flows that could be generated by Next Decade's share of trains one through five. So essentially, you're looking at 1.3 billion to 900 million of cash flows. And so this only includes trains one through five. Obviously, like I said earlier, trains six through 10, they'll probably have a much larger share of those trains. Because they will have had all this cash flow coming in and they'd be able to take a larger stake. Um, okay, so jumping back to my outline here, the catalysts, which I kind of somewhat already went over, we have the SEIS, so the environmental thing that's going to be issued by FERC is coming out in July. That's any day now. And then the final investment decision for trains 4 and 5, that's by September 15th. And then we have another FERC approval for the next train. So we got a lot of coming catalysts for this company. Okay, now I just wanted to go into real quick the two analysts that are covering this company. Actually, I guess we can say it's three, but I think formally there's only two covering. Um, yeah, there's two buys right now, zero holds, zero sells. Okay. Um, Both of the analysts have a $15 price target. Devin McDermott from Morgan Stanley, who just issued something that I tweeted out this past week, and then Benjamin Nolan from Stifel. Um, Here is the article from Morgan Stanley. So raised the firm's price target on Next Decade to 15 and keeps an overweight on the shares. The company continues to expect a final draft supplementary environmental impact statement from FERC. That's what we talked about. By end of July, and the analyst tells investors in a research note, the firm believes a final investment decision on Train 5 could come before the end of September, consistent with the timeline for the price lock on the new engineering, procurement, and construction contract. Okay, so I think we're in good shape there. Let's see. The TD Cowen one, they had raised their price target to 11. Let's see if there's any recent comments. Oh, this is all the way back in April for, but we can take a look at it. Benjamin Nolan reiterated a buy and a $15 price target. The finalization of a binding sale. and purchase agreement with Saudi Aramco for 1.2 MTPA of offtake from the proposed Train 4. And then the contract is for 20 years on a free on-board basis indexed to Henry Hub. This is only 2 months after NextDecade received a positive outcome from the court appeals process and weeks after receiving a positive draft supplemental environmental. So that goes into some of the historical stuff. Um, Ultimately, the de-risk nature of the regulatory approval and the fact that Train 4 at Rio Grande is a brownfield expansion, we believe NextDecade should be able to reach a FID in the coming months. Given our Train 4 valuation of $11 per share discounted, 18 share undiscounted, we would expect shares to trade closer to that as the likelihood of success has increased. Okay, so there you have it. That's a lot of detail. I hope I didn't go into too much, but um, all of that to be said that this isn't a normal pre-revenue type of a stock in my book. There is a lot of development, a lot of money, and a lot of that has gone into this. Okay. Um, so it's really a matter of time. That's why I think this is a great like long-term hold. This thing will be generating billions of dollars, by 2027, 2028, barring any kind of engineering disasters or something. Um, okay, so now let's just take a quick look at this, weekly uh, price chart here. I love this chart. I mean, you got the left shoulder, neck, right shoulder. It's like your perfect um, inverse head and shoulders here. And right at 1087, or roughly, maybe it's more like 1080, it breaks. It's basically gets to blue sky. Um, so I really like that. If we take a measurement from, let's say, $4 to, let's just say 9, that's a $5 move here, or the width of this base here is $5. And so let's apply 5. This is the way that I usually make a technical measurement, right? So from 9 to from 9 to 4 is $5. So I just add um that same $5 onto 9. So, I think it can get to about 14, just using a rough technical estimate. Um, Now, it won't be a straight line, but there are a lot of catalysts that could get us a nice run going here. And it did close on its highs on Friday. I mean, that's a really nice looking candle on the daily chart that I'm on now. I could see some profit taking maybe around 11 because it's a nice round number. But what I'm thinking is that I might take some of my options off at around 13 bucks. Maybe at 12, I'll take a portion off and then another portion off at 13, um, and be out. 14, I think, is you're valuing it pretty richly. So I'm going to hold my shares longer term, but I think the options, my target is about 12 for the first target and then 13 for the second. So that's where I'm at. Okay, I hope this helps. Let me know if you have any questions, on Next.